Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a little bit of consolidation off of yesterday's directional move. At this point, heading into the open, the bigger picture bias continues to be clearly bullish, and even on the smaller time frames, as long as we're holding yesterday's breakout area, 78.75 to 81.75, the buy side can still jump in and push the ES back up towards the 94.75 to 95.75 and up towards 98 to 2100. Heading into the open, we have pre-market support at 2089, followed by the initial support zone at 85 to 87.5, and those are both areas which are pretty good trade location for long setups, targeting a move back up towards the gap fill towards that 94.75 to 95.75 pre-market resistance zone, with potential to test 98 to 2100, and then if we are seeing strong broad market buying, then the market can even go higher than 98 to 2100. But at the very minimum, on a pullback towards initial support or pre-market support, ES can go back up and tag the gap, tag yesterday's VPOC, and then if we're seeing sustained upside momentum like we saw yesterday, the market can go even higher. So right now there is directional alignment across multiple time frames where the short-term bias is bullish, the larger time frame bias has been bullish for quite some time now, so we can lean on that, and as long as we are getting good enough trade location, we can still take those long trades, and our focus will continue to be on the long side, and we will continue to be conservative and cautious on the short side. Now yesterday we already got a pretty decent directional move, so today we don't necessarily have to make the same type of move or the same magnitude of move. We can still go back up to 98.2100. We can technically even go up and tag the 04 quarter to 06 quarter resistance. We have an open gap and a naked VPOC up there. But as we continue to go higher, we are going to have to see more and more momentum and broad market buying to support those higher prices. So those higher zones are not necessarily the highest probability targets just because they are further away, and we would have to see continued strength on the upside to actually get there. Eventually, of course, we can get there and we can even go higher, but on the day time frame today, given the light volume and given the strong move yesterday, we may only go up towards the 04 quarter, 06 quarter. That zone can end up capping the upside, and even 98 to 2100 is a zone that is active resistance until taken out. So for our targets, pre-market resistance and initial resistance are going to be higher probability targets rather than looking for a move up to the next zone. That's something we'll have to gauge in real time to see if the underlying market really supports that. On the downside, the only time we would have to be cautious is if we saw excessive weakness in the market, where if on the day time frame it was turning into a reversal or trend down type day, which is the very low probability scenario. So that's just something to be aware of just in case, but it's not something to focus on at all. So it's something that would only come up if it were very clear in real time. But aside from that, good trade location, leaning on that larger time frame bias, that has been a theme that has been working really, really well, and we're going to continue to do so. So initial support zone is a good long setup first test. Below that, 78.75 to 81.75 is an area that can cap the downside and result in a reversal back up towards 89 and then pre-market resistance. And again, that's even if the market goes down there. Ideally, you want to see the market holding above 85 to 87.5. The lower we go, the less strength the market is going to be displaying, right? So given the strength of yesterday's move, even though it was on fairly light volume, it was still a very directional day. Ideally, you don't want to see too deep of a pullback. So ideally, ES holds above initial support, and from there, we get a reversal back up towards pre-market resistance and initial resistance. And if we don't even go to initial support, let's say if 89 ends up holding, then we could even go higher. The range potential would definitely support a move even higher. But overall, expecting the market to essentially consolidate yesterday's gains have a bullish skew on the day. And like I said, the only time we'll adjust that plan is if we saw very clear-cut signs that we were getting excessive downside momentum and excessive broad market weakness, which is something that's absolutely not present in the market at the moment. Right now, our focus is purely on entering long on pullbacks into support and looking for a move back up towards gap fill, previous VPOC, and initial resistance. The econ calendar is fairly light, so we don't really have any major catalyst that can reverse yesterday's trend. So those are the main ideas heading into the open. Let's see if the buy side can maintain control here, and we'll take it from there.